Good afternoon to everyone. Good afternoon, Mai. I think we are missing Geoff for right now, but that's okay for this moment in time. We are still seeing a pretty tepid market as the afternoon session starts off. I've still got my entry point, which looks a bit far away now. It's over 100 pips, not quite 100 pips away, but it can still get down there. It's no big panic. I'm just looking for a test of this area here, but of course, if price stays just above here, then I will be quite happy to continue to look for upside if that is what all that is on offer. Let's just have a look at this level here. Yeah, it looks like it could actually drift another 70 pips to the upside without any kind of rejection if it remains above here. So we're really dealing with two levels here on the FTSE, and there was a little test there. I would have been quite happy to take a short to go long, but that hasn't really shaped up. When we look at the pivots here, yeah, that would have been, that still looks like the sweet spot actually. So maybe if it comes down to this point and that coincides with the weekly pivot, maybe looks like tomorrow, that's more likely to happen. We can have a look at that one. Let's just see. What we've got here. Let's just see. Right, let's look around the grounds and see if there's likely to be any opportunity for the rest of the day. Probably not. S&P continues to stretch its legs to the upside. I'm still in a shade of doubt if it got to the highs of 33.90 of whether it could go through, but it does look like it's going to get there before any kind of retracement. Ethereum, I've taken a trade in, so I've entered a trade in Ethereum. So Ethereum is now long. I am in with that, and just looking across the board, Bitcoin also pushing to the upside. Let's check the metals, the precious metals. Gold and silver. What are they? How are they reacting on this risk on day that we have in this risk on environment? And this is the thing, you know, if we are in a genuine risk on environment, and there's no reason to suspect anything but more upside in the FTSE 100, and probably pushing right up to that prior level. Now, silver is something that I want, but I'm not going to buy it here. Still struggling to get through this this particular price. You know, you're going to have to consider the price. No different to the FTSE. If it starts to close above the very next session, then we're going to probably need to have to see whether there's an opportunity to take a long in silver. Oh, the risk on, risk off. I mean, it's really, if you setup wise, you're just looking for things that are risk on. And risk on is, you know, if we think about the stock market itself, then for people to make money, they have to take risk, i.e., they have to buy stocks and take a risk with their finances. You know, their finances are no longer in the bank; they are now in the stock markets, and it's risky because they might either pick the wrong company or they might well pick the wrong environments. Generally, right across the board. So you're always at risk when you're in the stock markets, and it just depends on whether you're risk on, risk off is the difference between defensive and non-defensive play. So the defensive currencies would be thought of as the Swissy and the yen most specifically, because the yen tends to have a trade surplus, so they don't tend to be you know, considered quite as risk on. Comparatively speaking, of course, you know, there's still a risk to putting your money with the yen. But they are thought of as a risk on environment for that very risk off environment for that reason, because countries that have got high levels of debt might well be investing for the future. So it's a stock picker's job or a currency picker's job to say, okay, look, they do have a lot of debt and they do have a lot of there is a lot of risk with this particular asset or currency, but if what they are planning comes off, i.e., at this stage in time, you know, the U.S. government and the Fed are pumping lots of liquidity into the U.S. financial system. But if their gamble comes off, then the dollar should strengthen over time. You know, later down the line, it could be, you know, a year, 2 years down the line. But over time, they're always hoping for the tide to turn, and when the tide turns, then they can start putting interest rates up, for example. But at this particular time, with the environment we have, that's just not the case. But a risk on currency would be a currency which would indicate growth. You know, if there's growth going on in the world, the most kind of common risk on currency that we would look at would be the Aussie. So if we think about the environment and how we can make a judgment call on whether we are in a risk on or risk off environment, then we are effectively saying, well, what do we need to look at to suggest that? And risk on would be things like, risk on would certainly be something like cryptocurrencies. That would be a risk on. That would suggest a risk on environment. Risk on would be stocks. Risk on would be the Aussie. You know, anything that kind of shows that there's expansion going on. You know, there's more people buying stocks. They push the stock markets up. And that puts more money into those companies, which means that they can expand again. So you can look around. So if you say, well, how's the S&P doing? S&P oil is another one. S&P moving to the upside. So that's suggesting that we're in a risk on environment. You know, this environment here would be risk off, and we can compare it. Let's see what happens when we're risk off and what moves in the opposite direction. So we'd assume that the yen, if it's risk off and defensive, should be moving counter to the S&P, should be moving up. So the dollar yen should also be moving down. And if we say risk on would be the Aussie, then a good proxy for the stock market might be the Aussie yen. So we'd be looking at the Aussie yen also moving down here as the yen strengthens and the Aussie weakens. So let's compare it. And you can see that the yen starts to weaken, starts to strengthen against the Aussie there. So it picks up here. There's the bottom. When we look at the S&P, similar bottom. You see how they seem to be moving in tandem, and we can go right the way back. I mean, let's have a look at this area here. This is where the last rally started and ended in the S&P. What happened with the Aussie yen? Very, very similar. Starts and ends in a very similar place. There was a high there that came down. Compare that to the stock market. Very, very similar. Hi, Sui. Hi, SF. Sorry. So,
Good day.
Yes, absolutely. So a really good way to play this fad, and it kind of gives you a little bit of a sneak in what you should be looking at if you are a currency trader predominantly. Then if you look at expansion, you know, what's going on with the US economy, if you know, and you can focus everything on your trading decisions, pretty much the majority of what you decide can be focused on the US economy. Now, if the US economy is suggested, in fact, let's not say the economy, because the economy and the stock market are two different things, but let's say the US stock market is predicted to move up because of stimulus, you know, for whatever reason, because we've got really good ISM numbers, because unemployment is falling, whatever reason that you put on it. If you assume that means that the US economy will strengthen, then you can straight away flip and have a look at the Aussie yen and see whether you've got a setup. So if you want a safer trade, if you can get things that are correlated, that are seemingly reaching high and low levels at the same time, then you have a much more high probability trade. Let's think about something else that could give us that. Copper. Now, where's copper? Copper's also copper is also thought to be a risk on commodity because people use copper in building. So when there's expansion going on, then you'll see copper being used. So let's have a look at let's have a look at copper as well. So with copper hitting the low down here, how did that correspond to the S&P? Where are you gone? There you are. S&P was just hitting an inflection point here. So with copper moving to the upside, S&P moving to the upside, and the Aussie yen moving to the upside, then you're starting to get a pretty good feel about what kind of environment we're in. Now, the other one that you should always check out is oil, because oil is also associated with expansion. So if you look at what's happened with oil, this was the last downward move in oil. How that compares to the S&P. Pretty similar. Again, you can see the S&P kind of fell the next day. Oil was just about to fall. So oil's another one that is associated with expansion. And you can just look around the grounds and see what correlates to what. With gold and silver, they do tend to be sort of a bit protectionist, and it's the same with the dollar. The dollar can actually be associated with expansion, and it can be associated with defensive. So you've got to know what data is important when it comes down to the dollar, and what data doesn't really mean anything. But what will tend to happen more often than not is that a country's or a region's currency will move counter to the stock market of that particular currency. So the S&P has had a huge rally to the upside ever since May, and if you bring in just a proxy for the dollar index, which is the euro dollar, then you'll see the euro dollar will also be strengthening at that very same time. So there's certain things that are well worth watching out for: oil, the dollar, gold, bonds as well. We don't have that on MT4. We'll all give you indication of what kind of environment you're in. No problem at all.
Super Six.
The Super Six, yes, the Super Six. How you doing there, buddy?
Oh, mate, having a wonderful time.
Yeah.
Technology's got me frustrated again.
Yeah.
Well, actually, I don't know what's going on. It seems Zoom and my computer don't talk to each other very well at the moment. I don't know why.
Not buddies, are they?
No. Zoom, as soon as I opened Zoom to get into this meeting, everything went black.
Oh.
Which is never a good sign.
No,
that happened earlier as well. And I think it happened on Thursday. So I don't know what's going on.
Well, it could be a whole number of things, I suppose, mate. Did you know my system does that occasionally as well, and then the very next day, or within a couple of days, it's back to normal. And not being much of a computer aficionado, I don't really know why it did what it did, but it just decides to give up the ghost every now and again.
Extremely frustrating.
Yeah. Yeah, I totally appreciate that, mate. And the worst environment to trade in is when you can't rely on your tools, isn't it? I mean, it's like a builder going into going to build a property, and every time that he mixes his cement and turns around, it's dried, so he can't even slap it on the brick.
It happens when you get old as well. You can't rely on your tools. It's as simple as
that. Yeah. I can imagine they do start to give way a little bit more regularly.
It's a way.
Lots of misfiring. So we are, as I was just pointing out, mate, looking at a risk on environment, but pretty tepid as it goes. I don't think we're going to get too much in the way of any decent movement. So I'm looking at. I've got my trade in Ethereum, so I've bought some Ethereum now. That is below entry, but it is pretty much right on top of it. Didn't realize that the spread was going to make it cost quite so much as it did, but the spread did end up costing me a bit more than it should have done. But it's just above my entry price now, but below my profit making price, if that makes sense, because of the spread. But I'm looking for some expansion in Ethereum, and this is really back to it, Fad. The first thing that I do, and the first thing that you should do, and depending on your time frame. In fact, Fad, let me know what kind of trader are you? Are you somebody that trades intraday, or are you somebody that trades swing kind of day over day on kind of longer term trades? Are you a swing trader or an intraday trader? Swing traders are the ones that kind of try and take the swings out of the daily chart. Swing, great. Okay, so the advice that I would give you as a swing trader is to try and make a judgment call, because we as traders, we have got to acquire the ability to try and predict the future. That's the only thing that we can go on. You know, we could be right, we could be wrong, and there's certain data points that we have to look at to say, you know, what's the future going to be. Now, I would advise you to look at 3 months if you can, and 3 months is a quarter. And the reason that a quarter is so important is because every quarter companies share their earnings. So that's the point where you get, and as I say, you can literally go to the stock market and say, how is the stock market doing? And getting really good at the stock market to know whether you should be trading certain currencies or avoiding other currencies. If you know the US stock market is going well, then it will draw you towards trading the Aussie. You know, draw you nearer to trading the Aussie. So when you're building your ideas, you can kind of you can start to discard quite a few trades. You know, you probably won't go long yen if the stock market is doing pretty well. And what you're trying to do is figure out how companies are going to do over a specific time period. If we are intraday traders, then we have to say, let me say I'm an intraday trader and I'm trading on the FTSE here. I'm looking at the FTSE and I've got to try and assume what's going to happen in the next hour if I'm an intraday trader. And if I get some further, because I've got to get my entry, if I get some further movement after that, then I am really in the money. But I've got to try and make a judgment call of where the market goes over the next hour. Now, looking at this chart, it tells me that it's probably not going very far over the next hour. So if I'm a swing trader, I've got to try and say, where's the market going between the next month and the next 3 months, the next quarter? Because as I say, that's when the data points come out. Month over month, you'll get data, and you're trying to guess what the next data print is going to be. And when you get good at guessing what the next data print is going to be, you get much better at making your trading decisions because you are with the sentiment that is about to be reported. If you trade after the news event, it's too late. You know, everything's already been priced in. So we can't trade after news. We have to try and get a. So I understand you're looking at key levels. I completely understand, which is a really good way to trade. But what you're talking about is technical. So let's say we are looking at the Aussie yen, and I want to trade the Aussie yen long because you know, the sentiment is pretty good here. There's a decent technical level here. Gosh, I don't know what you think about this, Geoff, but that looks pretty good, right? It's we're right on top of the monthly pivot. We're right on top of the weekly pivot. So this is a good technical level. Now, there's a possibility that this could still be in an uptrend, falling down to the trend line because the low is here. The low is here. The low's down here. So it could come all the way down here and still be in an uptrend. So if I take a trade here and I'm wrong, no big deal. I'm going to try and take a trade here and put my stop, you know, a little bit tighter. But I want to make sure that I'm still confident that even though my timing might be out, my decision to stick with the Aussie is right. That's the key. That's what I'm always trying to do. And sometimes I'm right and sometimes I'm wrong. And money management and really good entries can actually smooth out a lot of the times that you're wrong. I mean, we're no economists, but we can certainly attempt to get better at predicting what's going to happen. And the only way, if we know that this is risk on, if we know that we are in a risk on environment with the Aussie yen, surely what we should try and do is try and gather evidence which suggests that we will still be risk on in the next month. That's what we're trying to do.
Hour, try and get at the moment. Risk on, risk off. It's Miyagi.
Yeah, well, it is Miyagi. You're absolutely right, and that's the thing, isn't it? Because right now, if we think about what we have, what is currently driving the price of the stock market, to our knowledge, to our limited knowledge, but there's obviously data points. But if we think about what's the real driver right now, it's all about stimulus. That's what we're looking for. So if stimulus is the driver, what we need to say is at the minute there's no news on stimulus. There's every chance that it could be after the election, but we don't know. So if stimulus is on hold, that suggests the charts will be on hold. So that will also suggest that if we're at a high level, we should be looking for it to pop down. And if we're at a low level, we should be looking for it to pop up. So we can kind of make a judgment call just on the kind of environment that we believe we're in. And we are in a bit of a hiatus when it comes down to stimulus. That the stock market might continue to move to the upside, but I would doubt that it can go too much higher until this stimulus is announced. And if that means if it gets right to the highs before the election, then we should probably look for selling opportunities, and I probably will. So it's not easy, but we got to try and think about what's driving the market. And what seems to be driving the market, as Geoff alluded to, is really kind of Miyagi stuff, Fed and stimulus, not really down to earnings. In fact, we got bank earnings this week, haven't we?
And I think the biggest problem is it's changing very, very rapidly these days. The market sentiment, it changes day in, day out. We've got what did you say, mate? Sorry,
isn't it bank earnings today?
I don't think there was anything on my radar for today.
No, not today, maybe, but I wonder if it was this week.
Sure. I'm still trying to open everything that crashed on me, so I haven't got a Forex Factory available at the moment. But let me find one.
Yeah, they probably won't say. They probably won't have it on Forex Factory actually, but I'm pretty sure it was the bank earnings this week. Wow. Little headline here. Bank of England asked banks how ready they are for sub-zero rates. The Bank of England asked banks on Monday how ready they are for sub-zero negative interest rates, following up on its announcement last month that it was considering how to take rates below zero if necessary. Other central banks have pushed rates into negative territory in an attempt to spur banks to lend more, and the Bank of England said in September it was looking into what such a policy might mean in Britain. As part of this work, we are requesting specific information about your firm's current readiness to deal with a zero bank rate, a negative bank rate, or a tiered system of reserves remuneration, and the steps that you would need to take to prepare for the implementation of these. So it looks like they're considering it heavily. Now, that doesn't mean we should get spooked about the pound. That means that if we get Brexit, we need to get spooked about the pound, because it looks to me like the Bank of England may start moving to an environment of negative interest rates if we do get a really unclean break from the European Union, by the sounds of that.
Man, it's a different world, isn't it? It's a different world.
Yeah, it really is, and as I said before, it's so irresponsible of Boris Johnson to be putting us in the position that he's in, and I don't just mean with Brexit. I mean the way he's handled it. The European Union are now saying that any Brexit negotiations and deal have to be somehow binding in a pretty extreme way, because they just don't trust the UK government anymore.
Nice, eh?
Yeah,
it's a great state of affairs.
Yeah,
not pretty at all.
Yeah, it is bad, mate. It is bad. But anyway, we're still taking a trade in the euro pound short. And how's that getting on? Yeah, that's still okay. Still okay. I mean, we've still got a couple of days to find out whether we're going to get our Brexit deal going well. But this is case in point, really, fans. This trade that I've taken here is just on the assumption. Sorry, there might be somebody at my front door. I might just have to go and check. I'll come back to you. You're in the room, so I'll come back to you. Sorry, mate. I'll be back.
It's okay. I'll just pinch screen and go around the place and see what I can find. I've got to apologise because my charts have just gone everywhere. I've got no trades that I can see. Certainly not in notation form, but I have definitely got trades in the market. I just got to find them. Everything's just gone back to about 5 days ago, which is kind of frustrating, to say the least. Our euro pound, of course, is going very well. I've got to find a few others. Euro dollar, I'm not sure how that's going. That is bang on entry. Wow, okay, that's gone nowhere. But nice little sign, nice little rejection bar of the broken trade line and the daily pivot and the weekly pivot, not quite the monthly pivot. So that is looking a little bit bullish for us. What else are we in, guys? Euro yen. Sino, I don't know if you were in the room. You were talking about this earlier, yeah? And we discussed this, I'm sure, and decided that we could have used that one, that one, that one, or that one, and it would have given us the same result, which is a break and retest after a breakout. So that false break that you were looking at before, or maybe you were looking at the break and retest of the trend line, as we said. This was in the UK session. I remember it clearly. And we were really looking for that bar to be a little bit better, come back and retest the daily pivot and the backside of the trade line, or trend line as it is. And then we were going to take profit before the weekly pivot. I didn't do it. Did you? I don't know. Yeah, euro yen. Was it you, Fed? No, I thought it was Sino. But yeah, my memory is not fantastic, as you all know. Boris and Eaton boys have done a real number. John. Okay. So we've missed that one. Frustrating, but not the end of the world. I think we'll probably get another opportunity if that's going to be the case. And if it remains that way, it's also looking a little bit like an ABC to the long side, is it not? But the market gave us this, and that's what we're concentrating on, which is a retest of the broken neckline of the head and shoulders, right? So that's the driving force for me at the moment. I'm a little bit sad I didn't get into that. That's probably a very, very nice way to get into this. It is a lower high. Not a great reward to risk on the first part, but we don't worry too much about that. As long as we can get some money in the bank, get ourselves safe, this could go way down here. It is a potential reversal. We do have a lower high. Whoa. I'd like to get into that at some stage. I'm keeping my eye on euro yen very, very closely. What else? I know I'm in four trades. There was CAD Swiss. We've got an order on CAD Swiss. Yep. As you can see, guys, I've lost every notation that I had. So the entry for this, if you have missed it, it is playing a break and retest here. We're looking for the level, and it is stop loss is at 0.6920, I believe, and the entry is at 0.6955. Would that be right, guys? I'm going to have to go back and have a look at all these. They're thereabouts. Don't quote me at the exact levels.
I am back with you, mate.
Cheers, mate. CAD Swiss doesn't look convincing to enter. I'm okay with CAD Swiss. Actually, we had a conversation about this, didn't we, earlier? And can't remember who it was wanted to get in on the hourly chart. And I think it would have been this bar here, 1, 2, 3, 4 hours ago. No, I can't remember the bar. That whoever was trading it was trading it. Must have been that one. Anyway, I didn't like the entry because we're trading straight into DR1. We're trading straight into this high here. And I thought that was a very dangerous ploy. so far, that wouldn't have made any difference if that indeed was the candle, which may well have been. But I thought it wasn't such a bad idea that we've got a new high here, right? New high. We've been trying to get long this. We see the big double bottom here. We see a big higher low. I think this is quite okay. I don't have a problem with it. The tweezer bottom there, higher high, higher low, no higher high the second time round. That's a little bit of a concern, but we have broken that range, as I said before, and we've been kind of tracking this. And it was pointed out to me that we had a break and retest of the monthly pivot, the daily pivot, the trade line, top of the range. I like it. Absolutely like it. So that's the trade, guys. Above this candle, the stop loss, I've snuck below the weekly pivot, I think. Yes, that was my intention. Maybe it could even go under the trade line, but I think that's enough for now. Whilst ever we've got an inside bar here, I'm going to leave this in. So in other words, if this doesn't trigger today, I'll cancel the order. It will expire, and I'll replace it if this is an inside bar tomorrow. It's exactly the same as we've done with the 3 or 4 trades that we're in at the moment, which I'm reminded is euro dollar. And like we said, that's just on entry at the moment. Euro CAD is another one. We're trading that on the weekly chart. And we've got a TP1 around about there somewhere.
Again, we better. Are we in the other show already?
Oh no.
Oh, we better switch, mate. We better switch.
Sorry, I just got in here. Hang on. All right, you're in control. Switch us.
Actually, Maya's in control. Maya's in control.
Yes, I will be switching it to the live stream. I will end the live stream now.
Thank you very much, Maya.